Traders, what's going on? Welcome back to the weekly Forex Outlook and Reviews. I've been away for a little while doing these just to let the markets just do its thing at the start of June. The market's always a little bit slow, at least for the first 15 days. And I thought I'll just take a break, focus on other content for you, and then get back to this in due course. But I'm back, and hopefully we can provide some value moving forward into next week. I've had a look over the markets. Unfortunately, they are very rangy, so it becomes very difficult to do this because, as you probably know, I'm more focused on trend trading, breakouts, retests, patterns, etc., etc. So when the markets are ranging, it's very difficult to analyze what is happening. Now, I'll go over a few scenarios on each pair with you, just to give you an overview or at least a bias or something to think about, should I say. And then, yeah, I'll really go from there. So the first pair that we're going to take a look at this week is pound USD. We're going to go over 10 pairs, by the way. So I'll put the timestamps in the description if you want to skip, then feel free to do so. But the 10 pairs we're going to be having a look at is pound USD all the way down to gold down there. So the first pair we'll take a look at is pound USD. You can clearly see the market's ranging. Now, when the market's ranging, it becomes very difficult to trade. What we really want to do is just get an overview of what kind of behavior was in the markets last week, or a sentiment at least. Now, we know that from the 7th was when the week started, so around these times here. And we can see at the start of the week, the markets, again, started off fairly bullish, moving into New York close. Moving into the London session, we had a correction of that move. And then moving into Wednesday, we had a correction of that move. Our biggest day, I believe, was actually on the Wednesday, which was the 9th. You can see the market push really strong bearish to the downside, indicating some sort of dollar strength. Now, the dollar has been strong, and then, it's been corrected, and then strong again, and it's been corrected. But what I want to do is just gather the last previous behavior moving into the 10th, which was on Thursday, where we had a correction of the previous day's move, and then moving into Friday, we've had a really strong bearish run on pound USD. Absolutely amazing day to be trading on Friday. If you wasn't in the markets, it is what it is, like me. But if you was in the markets, you should have been able to really capitalize on some of these moves on Aussie dollar USD, pound USD, euro USD. Fantastic markets. Even gold had an unbelievable selling opportunity. Wish I took it, but I wasn't at the charts, and I had such a fantastic week. It was time for me to step away. Anywho, so the previous behavior has been bearish. Now, look, it goes without saying, as this is a consolidation, it is always best to wait for the markets to break out of these consolidations. We know this is a tug of war between buyers and sellers, and we're waiting to see who's going to take over, or literally just take over of these markets, be in control, shall I say. So what we want to do, just mark our structural highs and lows, and then we want to figure out what's happening here. We know this level here is a very significant level because price is failing to break above it at 40.84. Now, if the market comes back to this level and starts to show signs of rejection, i.e. failing to break below these structures, we could have another bounce again. In between this range, we do have a mini range that's forming lower than the previous highs. After this breakout here of this structural high, you can see the market has now formed a mini range within this bigger range here. Now, I would say, look, if you want to trade this, there's a couple of things you can do, because if the market's going to continue to range, you might as well take advantage of it. You can start looking for buys at 40.84, but let me just make this clear. You're not looking for buys immediately. What you're looking for the market to do is create multiple wick rejections, as you see previously here and here and here. Once the market creates these wick rejections, so let's just say these are these wick rejections here, what you're then waiting for the market to do is break above a level that's created as a resistance to then show signs of momentum shifts. And then you're looking for price to come back to broken resistance that can now turn as support to support your analysis, and then look for those buying opportunities. This is the best way to trade ranges and to take any sort of reversal play into consideration. The reason why I say this is because you do not want to be first into the markets. Be happy to be second or third, because the truth is this bearish move to the downside yesterday provided ample opportunities for you to get into the market. Let's say now in the 15-minute time frame, he was looking at these structural highs, right? Around 41.80 as a resistance level because of the previous history. Now, let's say you wanted to jump into this. A lot of traders will be looking to jump in at the earliest signs because of fear that they might miss the trade, or fear that if they don't take it, the market's going to leave without them. The same thing, I guess. But what usually happens in these instances is you find traders get stopped out because the market runs through their stop losses and then goes in their direction. This is a prime example of what I mean by being first. Now, you might say, oh, I wouldn't have taken this rocks because price hasn't come back to this key level. But I can guarantee you the majority of traders would have attempted to take this. If not at the structural highs, at the lower highs, calling this a double top, then a triple top, then looking at this as a final opportunity before getting run out. Guarantee you. Now, what we want to be waiting for the market to do is take out structural lows to show that price is in momentum. And then you want to be looking for your retest levels, your patterns, your lower high retests, your continuations. And look here. This is first. This is first. We don't want to be first. Wait for the evidence and confirmation. Get in second. Get in third. Get in fourth. Get in fifth. Guess what happens? You still make money. Because the truth is, you're not in the markets to make this whole move down. As much as you'd like to think you want to do that and you're that type of trader, kudos to you, George, if you are. But listen to me carefully. It's not sustainable, and you cannot run for home runs every single trade. If you're running for home runs every single trade, then you might as well send your resume to some of these big banks and institutions and say, I'm able to hit these big 1 to 10s and 1 to 20s on a daily basis. They'll pay you a huge salary. You don't have to worry about trading too much, and you guarantee yourself some sort of security. But I can guarantee you that's not happening. Okay? Focus on just making money. Get in, take your partials, go for your 1 to 2s. You know me, I like my 1 to 3s. Get out. If on occasions you're in the market and the market spikes and you get a 1 to 5 or even a 1 to 10, which is possible, because I get big risk rewards, and I certainly know members of the academy that get really big rewards. But I just want to make this clear. Don't run for big rewards every single time. Okay? It's just a waste of time. You'll give money back. You'll be demotivated. The markets will just seem like they never move in your direction. You close your trades and then they go in your direction. You know, it's just constant battle. Anyway, so that's what I mean by not wanting to jump into the markets first. So this is kind of the pattern you're looking for here if you're looking for buying opportunities. Now, previous behavior on the close of Friday was bearish. So obviously we know that if we're going to be looking for a continuation of this behavior, we're going to be looking for the market to continue to push down. Now, I don't know the sentiment of the market, whether it's fully bullish or bearish, but what I will say is that if the market breaks 40.84, you can happily look for a retest and look for that continuation. Because of this tug of war here in the markets, you can clearly see that buyers and sellers have been trying to take over the markets and have failed. So the best thing to do here is to wait for evidence of the breakout and then look for the continuation, at least back down to some of these structural lows. The range we have here back down to some of these structural lows is around 51 pips. Oof, that's huge. If you like me using the 1 minute time frame with a 15-minute time frame with a 4H time frame, then there's a very high chance you can get yourself into a decent enough 3 pip, maximum 5 pip stop loss, and you're looking at 5 times, 10 times your reward here if you get in a good trade. So this is what I will be focusing on moving into next week. Now, just remember, this analysis is of my own opinion. This is not financial advice, and the markets could fly up and do nothing in line with what I've just said here. So just be wary of that. The next pair that we'll take a look at is USD JPY. Now, just taking a look from the 7th again, you can see that the market's opened bearish. Moving into Tuesday, we started to have a correction of that move, and into Wednesday/Thursday, and we had a sideways move in market. It was only till the New York session did we see the market start pushing to the upside with a lot of bullish volume, indicating this dollar strength here. And then moving into the Asian session, we had a slight correction. And for the London Open, we had an attempt to continue this bullish run to the upside. Now, we had a failure to make new highs, which is indicating that the dollar has clearly not managed to break key levels in the market to indicate what could be a start to a new trend or directional bias here. And we got stalled around 109.69. Now, the markets then continue to push to the downside during the Thursday session into the Asian session. So this was around New York close here. And then moving into Friday, we can see the dollar strength started to push this market back up into the London, New York, and then into the close. Now, I would say that there's a lot of evidence here to support bullish structure forming and behavior based on dollar strength and looking at pound USD. So I would say here that my bias moving into next week would be buy bias. I'd be looking for the market to continue pushing bullish into some key levels in the market. This personally will be a management level to me because I see these wick rejections as a level in the market where price is reacting to. It doesn't necessarily need to come into 100%, but around the 109.89 mark, we can see that price has been struggling to close above. I'd also like to say that if price does start to break above 109.89, then we can start coming out to some of these levels here. These are levels in the market which we identify as previous structural lower highs on the intraday time frame. So where structure creates a high, a break, and then an intraday lower high below the broken level here. So I think this is the target level that I'd be looking to see the market come to if we continue this bullish behavior. The idea would be here to see price closing above this level initially. This is a very important factor because we've had 1, 2, 3, 4 occasions where prices failed to do that. Then I would look for the retest and then a continuation. Now, the range on UJ is very small, so don't be shocked by what you see here. But the structure where price can find the most resistance initially is going to be a 17 pip range. And then if we start to break above it, we should see here around a 25 pip range. So 40 pip range in total on USD JPY. You should be looking to get a stop loss of around 2 to 4 pips on the intraday time frames. And with that range there, again, you'll be in a position where you can at least 5, 6, 7 times your money. So that's my analysis on USD JPY. Just keeping it super simple. Just understand that previous behavior on the close of Friday was bullish. We've had an attempt to break the highs, not the lows, so indicating more bullish behavior here. We'll definitely get some sort of sensitivity around 109.89 with prices failing to close above strong, but that aids towards our bias here of dollar continuing its strength. Again, it is rangy, so just understand sometimes the breakout close above is always the best way to go. Well, no, not sometimes. It is the best way to go. So be patient and wait for that close, look for that retest, and let's see if we get that continuation. Next pair we'll take a look at is Aussie dollar USD. Now, this just falls in line with the bias of the markets. We can see since the 7th, the market has been tapping into last week's highs, failing to break close above these levels here at 77.65. There is definitely a sentiment in the market where the dollar is showing signs of strength because we've seen it on GU, we've seen it on UJ, and now we're seeing it on Aussie dollar USD. The idea is that once we start to see price breaking above this level, which we can look at as a breakout and a break back into structure, you can call it a fake out, you can call it whatever you want. It's all the same thing. But where price is failing to break out and break back in. No, price actually did that, but price is failing to break above and close and then break it back into structure. What we're looking for now is a bearish move to the downside because 77.65 has held not only once, but many times before. Look here in the past on the 20th of May, again here on the 25th of May, again on the 1st of June, and around the 2nd of June, 7th of June, 9th of June, 10th of June, and then look here on the 11th, which was yesterday, where we've had this reaction. Very easy sellable opportunities, but what are we waiting for again? A break of the structural low, head down to an intraday time frame, look for the market to break close below this level. If you can't find trades, keep scaling, looking for the retest, keep scaling, and then eventually, once you scale down enough, you will start to identify patterns that are tradable. Okay. If you cannot identify this as a clear trend, then there's not much I can help you with anymore moving forward. Somebody said it on my Instagram the other day. Oh, Rox, you always show illustrations of where the market is trending down, but it never seems to trend down for me. Well, let me tell you something. The reason why it never trends down for you is because you're too busy taking trades you shouldn't be taking, instead of being patient and waiting for the markets to develop like this and take these types of trades. That's the reason why. Okay. So look here, 1 minute time frame. We have a retest. We have a double top. Beautiful. Key levels forming, price trading below major levels in the market, break below structural lows, retest levels, break below structural lows, retest levels. Where did all of this come from? It came from the break on the 4H time frame. After the 4H time frame initiated that bearish move to the downside. Once we get that bearish momentum off of the key level at these structural highs, then we're looking for a continuation down. It really is that simple. Okay, so that's how you have to look at it. 4H time frame. So let's cut to the chase now. We know that the dollar is strong or showing signs of strength. We can see the behavior of this market is bearish. We've had the break close below this level around the 77.55 mark. So this is a good sign of bearish momentum. And even better still, what have we had? We've had the break below this level here. This is the most significant level because this was the last high that was formed in the attempt to make a new high here, which failed. So now we have to close. What are we looking for? We're looking for a bearish move back to the downside to around some of these levels here, showing signs of a continuation of this bearish move. And then we're looking for the retest of structure and then the continuation. It's that simple. Now you have an intraday level in the market where price has created a support. So if you go down to the 30-minute, you'll see here, just adjust it, price is going to break below. If you're looking to trade it on an intraday basis, this is your intraday break, this is your intraday retest, this is your intraday continuation. So these are your two options. This is your plan A because this is a strong push phase. Always wait for the pullback. This is your plan B. Targets are always going to be structural lows or structural highs. So in this instance, we're looking for targets back down to 76.65. The targets down to 76.65, or should I say the range is roughly, oh, that is gorgeous. Let's say 28 pips. Let's stretch it, make it look pretty. That's 30 pips range to the downside. And on Aussie dollar USD, the same with USD JPY, you should be looking around 2 to 4 pips stop loss if you're an intraday trader like myself, and then taking advantage of this move here. You're looking at around 7 to 10x on your investment. So that's my analysis on Aussie dollar USD. Next pair we'll take a look at is USD CAD. Very interesting here, as opposed to like GU and some of the other pairs that we've just analyzed. EU, I believe. We haven't yet broken out the consolidation other than Aussie dollar CAD there, Aussie dollar USD there, sorry. We haven't broken out of any consolidations. You can see we've now broken out this consolidation around 21.36 here. And the idea is this, that price will continue pushing bullish. Now, what has happened is prices come into a major level in the market. So this is the level of sensitivity. This is where orders are sitting in the market. I'm not going to get technical because I don't really care about it. I just focus on immediate price action and behavior. But clearly we can see after the strong push up, we've had a reaction and the market has fallen to the downside. Doesn't mean I'm going to be looking for sales here because I'm not stupid. I know the behavior at this moment in time is bullish. So even if this is bearish and it goes down, I'm not needing to be first. I'll wait second or third. But for now, the behavior is bullish. That would mean that I need price to pull back to a major key level in the market to find some sort of retest and then look for a continuation to the upside. I can use this as a range to look for tradable opportunities from this structural low to this structural high, which is around 40 pips here. And if not, the market does not come back to this structure, then we just simply wait for the breakout and the retest of this structure to then look for a continuation up. It is that simple. Until the market tells me that the behavior is bearish and the structure is turning to being bearish, I'm only looking for buys. I only need one bias per day. That helps me to stay focused and in line. It stops me from jumping around taking buys and sells, which I do anyway because I'm an intraday trader. But this is advice for you guys so that you stop jumping around looking for buys and sells on the same pair. What you need to be doing is identifying the currency strength / weakness, identifying your key levels, previous day's behavior, and then make a plan to look for buys based on that, obviously, and structure. That's the best plan. I've just given it to you in a nutshell, actually thinking about it. So That's our retest level. That's our breakout level. And that will be my analysis here on USD CAD. The next pair we'll take a look at is pound JPY. Now, the overall structure of this market is tipping towards being bearish. We're making lower lows and lower highs here in the market. The thing is, the behavior starting from the week was moving sideways into Tuesday. It was only till Wednesday that we had this big bearish move and then a huge correction on Thursday. The best part of the Asian session into the London Open was also moving sideways. And then it was only until towards the latter part of the day, so the New York session, did we get this bearish move to the downside. We do have to respect the fact that the market is making lower lows and lower highs here. We also have to respect the fact that price failed to break above a major level here in the market. So this is the most significant level. The reason for that, and the reason why it's not this high here, is because this is a breakout and a break back in, which we can disregard and look at as an indecision here. So we focus on where the market tapped the most at 55.22. We have a level here in the market around 54.93 where price failed to break below. So this is significant to hold the market in a range. And then when you have this break below, you have that bearish behavior evident in the market in anticipation that price will continue bearish down to some of these structural lows here. Again, not these lows here, because that's the breakout and break back in. This is the level where price tapped the most. So my idea would be this: in order to look for continuation sales next week, I think personally you do have a retest level here, but I think you're taking this retest in an area where there's lots of traffic, lots of quick rejections. I think the best and safest thing to do in this instance is to wait for price to break this low. Once you get the break of this low, now you can start targeting the level where price broke and then found some sort of support all of a sudden and then rallied up or corrected this impulse move down and then target some of these lows here. Now, this is a huge range on pound JPY. Well, it's not as huge as I thought, actually. It's about 40 pips. That would do again with pound JPY. You can be looking at a stop loss range of about 5 to 7 pips here from an intraday perspective. So you're still getting a lot for your money, which is completely fine if you get in a good entry. So I think the idea would be to see price break below this level, look for the retest of this structure here, and then see the continuation down. I think this is the best play. We don't need that level here. This is the most important level for continuation sales. This level here is the most important level. Just as long as price trades below it, we can still look for sales based on behavior. Also identify the brick wall here as well. It doesn't need to hold 100%. Price can still come back to 55.20 for a retest and then look for sales. But just identify this as price trading down as opposed to up. And then that will really help you gauge where you can be looking for trades. Now, if you guys and ladies are not looking to trade this below 155.63, then you know the best plan of action is just to continue to wait patiently. GJ has been an absolute horrible pair to trade in recent times. I would advise focusing on dollar pairs because that's where the volume's at right now. That's where the markets are moving, and they're easier to gauge and understand. This is just a mess. The next pair we'll take a look at is Aussie dollar JPY. Now, it's really hard to gauge what's happening here. We know on USD JPY, we're seeing the markets move bullish. Now, we're seeing strength here with the yen on pound JPY and Aussie dollar JPY. Now, what does that mean for us? Well, that could help support our USD JPY bias, which is bullish, simply because if the yen is holding up against the pound and the dollar, it means the yen showing some sort of strength / Aussie dollar or pound weakness. Now, when the dollar is moving stronger, the US dollar is moving stronger against the yen. That definitely supports our bias with GU and EU, because normally if you bring two strong currencies together, you have a tug of war. So that really helps reinforce what we can be looking for moving into next week. Now, with the bias of pound JPY failing to continue pushing bullish and starting to turn bearish, we can help support our bias here on Aussie dollar JPY, looking for sells moving into the start of next week. Plus, with Aussie dollar USD showing signs of a bearish sentiment, we can also look for sells here, identifying Aussie dollar as being weak. So what am I looking for? Well, a retest of previous structure is always a nice place to start, because price likes to push, then it likes to exhaust, and then it likes to continue down. So the first, or plan A, would be a retest of 84.65 back down to some of these structural lows here, which is the bottom of the last low at 84.37. The range here, again, only needs to be small because the Aussie dollar and yen pairs are completely fine to be looking for at least a 3 to 5 pip stop loss. And if you're not comfortable with taking the retest of consolidations, or you don't really like the way that it looks, you're then simply waiting for price to break below some of these structural lows again. Very, very simple analysis. If you thought I had a magic ball, I really don't. This is all I do. And I just really focus on identifying currency strength, working with structure, making sure I understand the behavior, linking it all together with multiple time frame analysis, finding the patterns that are repeatable and executing. The only difference between me and the majority of traders out there that are not finding the result they're looking for is that I manage my risk aggressively, and I go for my 1-to-3 risk reward ratio trades more often than not. That's it. That's it. Just play the numbers. So that's my analysis on Aussie dollar JPY. Next pair we'll take a look at is USD Swiss Franc, continuing to support dollar bias here, which is strong structural low where price failed to break above. Huge wick traffic area here where price failed to break above, finally breaking closing above. Now, am I concerned about data to the left? Well, we've ripped through 89.79 here. Well, the only level that we're finding resistance is around this level here. Now, once we find some sort of resistance, it just simply means that, buyers are either taking profit, sellers are jumping into the market, or, we're coming back to collect some more orders around some of these structural lows here before we can continue up. That's how the market moves. Previous or close of the behavior on Friday was bullish. Structure is breaking highs, and clearly we know the dollar is strong. So I think the first thing we're looking for next week is a retest and then a continuation to some of these structural highs here. The range that we have back to these highs, again, USD Swiss Franc should provide us with some nice pips here of 26 pips, which is a little bit small of a range. Okay, be wary of that one. This is for those that are comfortable trading this pair. The spreads on USD Swiss Franc are bigger than most, so just be careful. And the range here is a little bit small. Not saying you can't get into a trade. I'll always look for about a 3 to 5 pip with most of my trades. But for some of you that may be trading high time frames, you might be looking for a bigger one. Just be careful. Make sure you have a break-even range. I'd say the best plan of action to be safe rather than sorry is always target previous high low. Remember we spoke about that at the beginning here. So now we increase the range by at least 1.5 times what it was previously. You're looking for price to break, close above this level. This will initiate the bullish momentum again, continue to add confluence to the data that we've gathered, which is dollar strength and Aussie dollar showing signs of continuation or of this continuation of this bullish structure. And then your range here is about 37 pips. So yeah, about 1.3 times bigger than the previous range here. It's up to you. But that's down to your strategy and how you plan to trade. But this is how I would look at USD Swiss Franc. Next pair we'll take a look at is Euro JPY. What are we seeing here, traders? You should already know. We're seeing signs of the yen being strong. We've seen that with pound JPY. We've seen that with, I believe it was Aussie dollar JPY, right? Yes, that's correct. And now we're seeing it with Euro JPY. The most important level during this push phase is this structural low where we finally broken below targets. If we were in the sell, we'd expect price to at least get back down to a major low. And then if we're looking for a tradable opportunity, just keeping it super simple, boring structure, to be honest with you, we're looking for a retest and a continuation. I wouldn't be looking for anything more than this. Price can obviously pull back a little bit deeper to around 50% of the range here. So we'll call this a 50% range. For those that know how I trade or have been following the weekly analysis, we'll be looking at these as pullback levels and this as a structural low. If we have the pullbacks, then what we're looking at here is a range from this high to this low of about 50 pips here. From 132.92, we have a range here of about 37 pips. Beautiful trading opportunities. So I would focus on these levels here. These are the most significant levels for this structure and see if we can have some sort of continuations back down to some of these lows here. Behavior is bullish, structure is bullish, yen is strong, euro is trash. Okay. Next pair we'll take a look at is Euro USD. Euro is trash, remember that. break below a major key level in the market. What do we see? Dollar strength, continuation down. Where's our targets? Structural lows, just like we analyzed over on Euro Yen. Now, what are we looking for? Two plans of action here. Area of sensitivity, so a 50% range of the previous push phase here. This can be ignored. We're looking for price to pull back into this as a retest level, back down to a major structural low. So always using the range after the pullback to the major low is your first targets here. And if not, then we'll be looking for the market to just pull away for a tiny bit, come back to this level, and then see this market continue down. The euro has been absolutely pants to trade. Back in the euro, everything against it has been working completely fine. But the safest option is knowing that the dollar is strong, euro is trash. So we can look for some sort of pullback retest around these levels here. Targets, retest, breakouts, and then continuations. Not worried about what's happening to the left. Just manage risk first, worry about targets next. So that's my analysis on Euro USD. Final pair we'll take a look at is gold. Been absolutely gorgeous to trade last week. Let's say no more. We have price failing to break above some major levels here in the market. Previous behavior last week has been strong bearish. We had a correction into the later part of the week, and then moving into like Tuesday, we started to see this bearish move down. Moving into Wednesday, Thursday, you can see that we had a correction, and then Friday come and said, we're not taking out 1902. We're trading below it, and now it's time to move down. I would say now final targets, well, it's not final, but targets moving into next week will be some of these structural lows around 1868, which makes a lot of sense here. I personally will be looking for price to show some sort of signs of a pullback into a key level here. If not, just like on Euro USD, I'm looking for the market to come back into an area of sensitivity, which is this area here. This will just fall in line with my 50% range, and then I'll be looking for a target back. So there'll be a push back down to some of these lows. It'll be a break and retest back down to some of these lows, and then whatever happens thereafter. Just remember, my analysis usually stands on Sunday for about 24 to 48 hours. I always advise that you reanalyze the markets on a daily basis, make it part of your routine so that you can understand what the markets are doing. You can understand the behaviors and the sentiments, and then you can make informed decisions on how you're planning to trade. Because if you just draw up or follow these analysis all the way till Friday, you'll find that market structures get violated, price does what it wants, may reverse totally, and then you're still looking for the biases that you think was the biases on Monday, which is just fixed mindset that doesn't work in trading. So that's my analysis on those 10 pairs this week. I hope you thoroughly enjoyed it. I just want to wish every single one of you a fantastic trading week next week. We're moving past the 15th in the next 3 days or so. So Tuesday, you will start to find that volume really starts to kick into the markets. We should have some fantastic movers, just like we did on Friday. What a teaser. It's been absolutely gorgeous. Dollars showing some great signs of strength, which we want to see. That's who really dominates the markets. And let's see if we can take advantage of it. Looking to close next week, really strong. We're not worried about profits, guys. When I say strong, I mean focus on your risk before your reward. Set yourself a daily limit of how many trades you want to take. Make sure you're reviewing the markets at the end of each day. Make sure you're waking up reviewing the markets. Always check for news. Keep to a couple of pairs. Stick to a couple of patterns. And really, that is all you need to become a successful trader. I'm not saying it will be easy, and I'm not saying it will happen overnight, but I can definitely say that you can smoothen a few things out that you're struggling with by just following what I've just mentioned there. And all I want to say to you is I wish you all the best and all the success that you deserve. Have a great weekend. Have a great week next week. Remember, just smash that like button for me. Share the love. Subscribe if you haven't already subscribed. Turn on notifications. And until next time, continue to trust the process.